Move forward, let's talk about the Fed, because you can't talk about inflation without talking about what is the Fed doing to get this under control. Now, most of you know the Fed really only has two tools in their tool belt to control inflation. One of the tools are interest rates, and they've certainly been using that, right? This chart goes back to 2000, and what it shows you is how the Fed, the Federal Open Market Committee, has been making adjustments to the interest rate over time. And if we overlaid this with booms and recessions, you'd see there's a big correlation to these humps here. Because when the market heats up too much, the Fed goes into his role of basically raising interest rates. And we've done it really at kind of an unprecedented rate because they're trying to be like shock and awe here to get this under control. But what they're projecting is after next year that it will start coming down and get more in line. Long term, they're hoping to get it down to 2.5 here. Now, the second tool the Fed has is their Fed balance sheet. The ability to buy and sell bonds at a mass quantity, being able to shove them into the market and pull them out of the market to adjust the market at that point, to try to keep it alive or to pull it back a little bit. Now, when you look at this chart over time, you look at the different presidential areas or time frames. You've got Bush, and after September 11th, things were actually relatively good during his tenure in there. During Obama's tenure, we had some major problems, right? We had the financial crisis, and that's where QE 1, 2, and 3 came into effect, and it just really pumped up that balance sheet. Then we hit COVID. And at that point, it was basically QE to infinity at that stage. And you can see it because we had such a rise in the balance sheet. And I would say between the two, I'm not so worried about the interest rates and how the Fed's working with that. I'm a little bit more concerned with the balance sheet. If this gets unraveled properly, they can ease out of the balance sheet and ultimately keep the economy moving. If they go too fast, they could totally stall and really, really play havoc on the bond market. So this is the biggest challenge. This is one of the things that we're looking at, and we will be constantly watching to see where they're going with this, because this is probably the biggest challenge the Fed has moving forward.